Hello, Rajiv Batra, head of India, ASEAN, APAC, and ex-Japan Equity Strategy with JPMorgan joins us. Rajiv, good morning. Thank you for joining us. It's that phase of the market where every conversation, every narrative is centered around the election cycle. In the overall scheme of things in which you invest, you tell your clients to invest, how are you advising your clients to position themselves before this important event?
So we anticipated that going into election, there will be rise in volatility. We saw VIX was at around 10 mark, and we anticipated it will go higher and stay elevated until unless the election got concluded, because that has been the trend since 1990. Only post-election the volatility declined. So our answer to them was that whenever any dips happen or correction happen, you should buy in the election, because once elections get concluded, irrespective of result, the median return you get from the market is 9 to 8% dollarized positive over 3 to 6 month period. Hence, correction to be better bought. Now, if we anticipate a policy continuity, our answer to them was you keep yourself positioned in a barbell manner, some safe and secured sector like a healthcare on a defensive side, but on the other side, continue to hold domestic cyclicals like financial, auto, and real estate.
Why are FIIs selling? If the India appeal is so strong, if everyone is of the view that India is now the only big, large economy where growth and visibility is clear, why are FIIs selling?
No, the answer lies what they were owning before. Are they owning the right part of the India which is rallying or which will about to rally post-election? Answer clearly looks no, because I've been on a marketing for almost last 2 to 3 months, trying to understand people's moves on the Western Hemisphere side. So what they were owning India since 1990 to 2050 was in consumption, IT side of the economy, which has been materially underperforming for the last 4 to 5 years. Knowing that policymakers are focusing more on investment, like little bit on a consumption side only, really put them on the spot, and their investments of consumption and IT are not working anymore. Hence, whenever the rally is happening, they are exiting on that one and try to get new allocations being done in investment cyclicals or other domestical cyclicals.
But the net number is negative, which means if they're selling, they are not buying anything. If the net number would have been positive or neutral, I would have said that, okay, they've sold a tech stock or a bank and they bought into consumption. That is not the story.
No, I totally hear you out on this one. What they were owning largely were in ADRs and the GDRs, because they don't have the licenses, or they used to go through the swap routes which available from the France and the other side. Now on that side, you don't have that kind of a depth of stocks available in domestic or investment cyclicals. Now these people are applying for FPI entity or NSC ID. Once that is get done for them, they will start taking an exposure. But due to now lack of choice, even they are waiting on sideline, and hence this is the reason why their underweight position is phenomenal right now in India.
The other thing, Rajiv, I want to talk about, and I just want to go back to the point that you were earlier making on elections. What is the assumption right now? Because, you know, the chatter is just about a different count on a daily basis. I mean, the bull case, if you assume that there is continuity of the current regime with either an inline or higher than expected seat share, what happens to the markets then? Because we're in any case a little top heavy. And what is the bear case? Is it not the continuity? I mean, is the market anywhere pricing in that as well? And then what happens then?
So when we started the election, that point of time, market was pricing in continuity overall. But at this juncture, the kind of the volatility we have seen, number one, and second, the relative underperformance. Because what has happened since election started from April 19th, market like S&P 500 US, HSCI in China, they all have ripped apart and gone to a plus 16, plus 10% kind of a year-to-date return. Nifty, if we will look, is still at around +1 or in a -1 kind of a territory. So suddenly from a top quartile performer in the first quarter, we have come down to a second quartile performer. So that clearly shows that market was not confident about the continuity. Hence we have seen this one. Now once you get a status quo like the last election kind of a seat share result also, there will be a rally for sure. But in case if the expected seat share are little bit plus or minus 10% around opinion poll which just happened before election, yes, you need to be prepared for a bull case scenario, because as I've
You mean a bear case scenario?
no, bull case scenario.
Okay.
So if it has gone higher in line with the opinion poll. So as I was highlighting to Nikunj, my FIs will discount there's a policy continuity in India. It was, capex was not just a 5-year cycle. It is going to continue next 5 years also. And hence I need to start putting in money. They are not worried about leaving initial 5 to 10% the opportunity cost on the table, but they are looking at that longer term 5-year return. But in terms of a bear case scenario, the bigger worry should be not just internally about if any unexpected outcome happen, but also if there's something on the US recession side or geopolitical side, which right now is not full 0% price into the global equity. So that can send some trouble even to Indian equities too.
So how is it that you make a portfolio which is sort of isolated from what's going on? I mean, do you look at the internal India consumption theme? For the last 2 years, it's been all about capex, manufacturing, infrastructure, what have you. Do you need to reduce exposure there because of the unknowns which are flying around? Not just domestic, but international as well, like you highlighted.
So we have done the exercise looking at the country's exposure towards global partner side or even the US side. So India largely on the revenue terms have a 9% exposure to US. Largely it comes from IT sector, few healthcare names and the metal and mining name. Hence, in terms of our allocation, we are still sitting an underweight on IT and metal and mining because we don't prefer global cyclicals at this juncture, not having certainty about the growth outside of India. Hence, we are much more positioned on domestic cyclicals, domestic demand, which keeps us overweight on still financials, autos, and real estate overall.
You did talk about some of the factors like concerns emerging from across the globe, but what about the overall macroeconomic picture back home, in particular, what the RBI could potentially do as well, and how that would influence the market?
So macro picture is improving every single day. We just got the IP print as well as PMI prints. So IP print clearly shows that the manufacturing exports are going gangbusters. We also are seeing domestic public investment doing quite well. And hence, even we have upgraded now Jan to March first quarter 24 GDP forecast to almost now 7% tracking handle, which NSO is around 5.9%. This lead us to now making FY24 entire year forecast at 7.9%. So the macro momentum is still quite great, and it is happening at same point of time where headline inflation is subdued. Yeah, food inflation is a problem right now, and hopefully IMD is forecasting a better monsoon, so even that concern should come down. But overall, domestic macro growth scenario is going great, and that will lead your earnings keep on going higher, which we have seen in the recent earnings season also.
You are bullish on defense, you're bullish on financial inclusion, but another theme which is a differentiated theme is waterways. When you say waterways, what do you mean? Ports or pipe companies? What are these?
This is your water as a mode of a transportation. Remember when PM thought about Gati Shakti, he thought all three modes, road, rail and water. First term belonged to roadways, highways and bridges. Second term belongs to railway. Now under the Sagar Mala, they have earmarked a money out of which 10 or 15% have been spent so far, but still rest spending. And waterways is one such kind of a transportation which is cheaper and can unleash a bigger amount of growth and productivity for country. We are seeing multiple companies who use inland water transport for their shipments and stuff, particularly logistics guy, are saying how better and efficient it is becoming. Due to this, we believe this whole entire next 5-year term, the focus could be on your waterways, which is shipping, shipbuilding, ports, and having better logistics for inland waterways.
You don't have any, at least the themes which we have, nothing on what could be called as a EV or energy transition. These are other two popular themes, which could include power, which could include autos, which could include a variety of auto themes as well. Consciously, have you stayed away from them?
No. So if you look at the manufacturing renaissance which we have created, India is not something new in manufacturing. We have been exporting auto, two-wheelers, four-wheelers, OEM, and even engineering goods in the past. Now we are expanding our remits towards other segments of the business also. When we look at the entire manufacturing ecosystem, yeah, EV is part of the auto side, and power, utility, even the corporate financing guys, they are also part of the ecosystem. So you have to look holistically the manufacturing as a theme, as a basket, which will benefit India overall.
Assuming that the current regime actually continues, right, whatever may be the seat share, where is it that you see the alpha generation in the market? Because it's pretty much discovered lot.
No, so that will happen from alpha could be generated by addressing the two pending factors of production right now. So out of four, capital and commodities are sorted for India. Land and labor are the other one which government is trying to address. So as you start addressing that, that will further unleash new productivity angle for the government. Because if you want to be a manufacturing hub globally, then you need labor availability overall. No doubt within the Asia, when we look, the lowest labor cost is still in India. But are these people still staying in the agriculture sector or joining the manufacturing work stream? Looking at the statistics, still 56% of the population is dependent on agriculture. As you move them away from agriculture to manufacturing, yes, not only the large cap guys, but even the small and mid cap will see the beneficial effect coming. And that will also solve your land issues also. So that will be my most alpha generating idea on the factor production side will happen.
And given that we're seeing a lot of these tech companies go very aggressive when it comes to new age technology, wouldn't digitalization, etc., be an important theme to watch out for? Where does that feature?
No, we are already seeing that, coming down in India and seeing now currencies no longer being accepted in QR code. Even if you buy a 10 rupee teacup also, you have to, that shows how effectively it is going overall. And this will help economy because this will make country much more efficient. When we try to compare with the other Asian countries or European countries, they have gone to a digital trend overall. So that is reducing the workload on the workforce over here who were doing this kind of a job of collecting cash, paying now. You take that out, you raise the efficiency level. So the reason why I'm highlighting so much about productivity, because in yesteryear, economies like US, China, everyone, the GDP growth always being above potential was one single factor, productivity, which is now India is seeing for the past 4 years. And I do anticipate that can continue for next 5 years too.
Okay, Rajiv, great to have you in the studios. Thank you so much for sharing with us your views.
Thank you.
Thank you.
If you like this video, then like, share and subscribe to ET Now.